Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, November 28th, 2022. Let's take a quick look at the charts. This is the weekly chart. It basically underscores the importance of when it comes to long-term buy or sell signals, multi-week to multi-month buy and sell signals you can identify certainly on a weekly chart. You really need to see how the week itself, typically Friday afternoon, settles out. With respect to the longer-term line studies and Fibonacci retracement levels, we slipped through the 172.77 5/8 Fibonacci. That is based on the March 2020 COVID low, labeled A in this chart, and B is the all-time high from a little over a year ago, November of 21. And we also slipped through the channel bottoms that are based entirely on the series of highs coming off the November high. So the same rate of descent, the same angle of descent, we slipped through that as well. We did not close above it. In fact, we closed higher on the week and above all that. So this underscores the possibility here of a longer term low, or at least the establishment, the placing of, and it could be a process in and of itself. We may get locked into a consolidator framework before turning higher aggressively, or we may rally out of here quickly. So, we'll get to that in just a second. By the way, before I jump into the rest of the stuff, could you please click like if you haven't already? We appreciate the clicking of like on our daily videos, daily Tesla, daily Apple report, both put out on our weekly stocks YouTube channel. And subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content is uploaded. We do upload the daily Tesla and daily Apple reports each and every day, and they're here for your use. And also share, if you would, with friends and colleagues, the videos if you can. Anyway, so holding above 168.70 to 176.81. And by that I mean continued weekly settlements at or above this region maintains a bottom picking dynamic longer term. Now, in terms of near term buy signals, let's talk about, in fact, actually what I'm going to do is show you the daily chart. Now, what I've decided to do is you can see the same formations in the daily chart of 169.24 to 177.64, and we'll continue showing that through the week, but we're going to keep the weekly levels as they are because there's been just so much slicing and dicing the last week. We broke below, we closed below, back above. I can even show that about a week ago, we did settle just below this channel bottom. I believe that was Monday of last week. And at the time I said, not so fast. This really deserves another day. If we gap lower and continue south in a bad way the following day, which we did not, then yes, we have the emergence of what is likely to be a long-term sell signal. But that did not happen the following day. We closed pretty much at this channel bottom the day after that, which was Wednesday of last week. Significant rally. And then Friday kind of held our own. We closed slightly negative on the day on Friday, but we are above this zone. And in terms of a near-term sign of strength, I could take a look at this chart here. Once again, these are the daily levels, 177.64, 169.24. You could focus more on the weeklies, 176.81 to 168.70. And it is 191.10 that may well be in reach today. All the minor points, 187.59, 83.20, and 80.63, all carefully chosen. 87.59 is a 5/8 Fibonacci from this high from about a week and a half ago. 83.20 is the high settlement price thus far following the low last week, and that would have been Wednesday's high settlement price. And 80.63 is actually nothing more than last Friday's low. And so if we break 80.63, 76.81 in reach. If we push through 87.59, 91.10 in reach. 91.10 is likely over the next few days following last week's reversal and coming off that long-term support area. 191.10 able to contain daily buying pressures. We might fall off from here into later week, back into the 168.70 to 176.81 region. So for those of you who are not only day traders, but perhaps 3 to 5 day swing traders, this could be a decent area. If you got long down here on a swing trade, this could be an area where you take partial profits. But also know, as I've said all of last week, following the test of this long-term support area on the weekly chart between 168.70 and 176.81, that the descending channel top at 210.35 should be considered a 1 to 2 week target. So with that in mind, closing above 191.10 168.10 is considered an eventuality or that channel top. And if today, and we may well close above 191.10 today, then within the week, over the next 3 to 5 days, we should test 210.35. And this classic channel top able to contain not only weekly, but possibly monthly buying pressure. So we could perhaps by the end of the week test 210.35 and come off of here into later December, fall back into this 168.70 to 176.81 area, and perhaps fill that wedge out for the next few weeks. It would be a settlement above 210.35 after having tested last week long-term support that would tell me that this market can run and run nicely longer term to the upside. I would envision the mid 260s within about 3 to 5 weeks before we run into midterm trouble, which is to say the mid 260s able to contain buying on a monthly basis. And that is actually illustrated here, this former channel bottom and this high here that was put out last summer. Anyway, just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. So let's talk about the downside one more time. And one more time, we could close below this structure today, 169.24, but I will then sort of caution you that there are some other parameters that need to play out. One is that the very low close last week, I think that was Monday, the low settlement price, 167.87. And as we move into later week, I'll then, still mention that we need to close below 168.70 by a 1% margin. I'll leave this level up all week. 167.01 is a 1% break below 168.70. And for years, I've used the 1% margin threshold as a validator of long-term buy and sell signals. In other words, closing at 168.30 on Friday would not satisfy those requirements. It would still be, let's see what next week looks like or Monday looks like. But if we settle this Friday at 167.01 or lower, which would be a 1% violation of this long-term channel bottom, excuse me, then we enter another sell phase, whereby over the following couple of months, possibly 3 to 5 weeks, probably more like 2 to 3 months, we continue south into this band of longer-term channel support. And as I've been saying, if we close below the 168.70 area in combination with this 5/8 Fibonacci, we could, over the following half year or so, unwind all the way back to A, which is where this incredible hyperbolic rally started from March of 2020. These are church steeple rallies. If you were to look at this chart in a more condensed format, you would see that the angle of this is really unprecedented, and we're giving it back at about the same angle. I'm not expecting A, but I am certainly open for that possibility if we close this week Friday at 167.01 or lower. Until then, this is bottom picking territory, and I'll get back to this chart here. The mid 260s wouldn't surprise me by the end of Q1, but once again, in order for acceleration to occur on that count, we need to close at this point in time above the 210.35 channel top, which, by the way, should be respected for its ability to contain at least weekly, if not monthly buying pressures when tested. And it's considered a 1 to 2 week target above the 168.70 to 176.81 region. I think that pretty much sums it up for Monday's Daily Tesla Report. Please click like if you haven't already. I'll be back tomorrow with Tuesday's Daily Tesla Report.